Hey, y'all, Zach McDonald, your real estate agent with Real Property Associates, and this is my Seattle real estate market update for May 2025. Welcome back to another monthly update. These have remained mostly the same since I started filming them about 8-9 years ago. I'm honestly losing track, but I like to have the same rhythm. We talk about a client story, we talk about the stats, and we talk about some applications for buying and selling in the Seattle area. Over the past few years, I've added in Bellevue conversation. The east side is a little bit different than the west side, and I've also added in weekly videos. So if you want to learn about the housing market here in the general greater Seattle area, please consider subscribing and following along on a regular basis. We'll start this update off with a little client story like we always do. And this one is a little special. I got to help some first-time home buyers purchase a house in Bothell. We ended up making, I can't remember how many offers. I know we held off on a few because there was going to be competition, but it was either our third or fourth offer this spring that got accepted. And for them, they made their best offer on multiple houses, and people were just willing to pay more money than them. And we finally got to the place where we had a house they really liked. And I think they probably, if you were to ask them, would say this is their favorite house that we ended up offering on. It's funny how that works, but we ended up getting it with a little bit over asking price, but great terms. And I think that's kind of where the market has been trending over the past couple months. So for them, there was a lot of crazy competition in the late winter, early spring, which I think a lot of people experienced. And then they found this great house with the right kind of timing and window for their offer. So really excited for them. And also it was a little bit special to work with them because I had also got to work with multiple people in their family over the last year. It became helping with a buy and a sell, and then referrals and connections to other people. And this was the last one, at least for now, in the family. So for me, it feels like the end of an era a little bit, the 2024 to 2025 family real estate agent, it seems like. But I love it. I really love, for me, I love the relationships in real estate. Out of everything, that's my favorite part of being a real estate agent. So the client stories always have a special place in my heart. And some of you who are watching this, I've got the chance to work with as well, and I appreciate those opportunities. And if you're somebody who's newer to the channel or watching, I'd love to connect with you in a more personal way too. Like I said, the relationships for me are the most valuable and the best part of being a real estate agent. Let's talk about the housing market here, and let's start off with interest rates because those have been a huge conversation topic over the past few years. Interest rates today on Mortgage News Daily's daily survey, 6.86%. We've really kind of been in the same place for a while. Last week, when I was looking at the rates, we were at 6.82, so not too much different on the survey. What's interesting is the median sales price in Seattle at the end of April is the highest median sales price we've ever had in Seattle for a month. $1 million. Okay. Barely up from the previous high in 2022. We were at 996, but we've now surpassed $1 million for a median sales price. So new all-time high in Seattle, median sales price up 4.3% year over year. So up a little bit from last year, but back to and slightly ahead of the previous high when interest rates were in that 3.5% to 4% range. And now we're sitting at what we just talked about, almost 7% rates on average. And so even with the higher interest rates, the housing market has kind of risen back up to where it was in Seattle. Bellevue, as we're looking at the median sales price in Bellevue, isn't at an all-time high, almost hit it earlier in the year. But if we look at a rolling couple-month average, we're right near or right at where Bellevue's previous highs were. Median sales price, though, just over $2 million, $2,065,000. And that's a 8.7% increase year over year, but more than doubled in Seattle. So a big reason that we added Bellevue into this is because Bellevue is really a big part of the Seattle metro area and essentially a representation of the east side versus the west side. That's a huge difference in pricing. So if you're looking at houses in Bellevue, you're going to end up paying about double of what you would pay in Seattle. And if we look at the past few years here, there's another graph I like to share, and this is that median sales price breakdown. You kind of see the last couple years in the two markets and how things have shaken out. We saw $875 in 2023, $958 in Seattle last year, and then that $1 million. You can see that recovery, and Bellevue was a little bit quicker to bounce back and hasn't shifted and changed as much over the past few years, but nonetheless has been rising back up as well. Now, let's also look at days on market, right? How quickly are houses selling in Seattle? Seattle, 6 days on market's the median. Bellevue is 5. Okay, so the middle number is quick, and that's been the same the last few years. It's not really been a difference in how quickly homes have sold, but how much they've sold for the past couple years. If we look at the average days on market, though, Seattle 16, Bellevue 12. So the average house is being brought up by those bigger numbers a little bit more. And so we're seeing a higher day on market, but still really quick. That's only a couple weeks in each case, and much better than where things were at in 2023 specifically, where things were quite a bit longer to sell on the market. If we look at the percentage of list price, right? You see the advertised prices, you think, how much am I going to need to pay? Can I pay the asking price? Can I pay less? What's the deal? And in Seattle and Bellevue, both cases, you're a little over 3%. So 3.3% in Seattle, 3.5% is the average percent over list price in both cases. Both are more competitive than King County as a whole. And King County is made up of a lot of different cities. Seattle, if we look at the amount of listings, is like a third of all the listings in King County. Bellevue, a lot smaller percentage of those sales and those listings. But in either case, they're both ahead of those numbers. I would say a lot of the east side as well is at a higher median sales price and percentage of list price. And then there are some more, the farther you get outside of the big cities, that's where you start to see those numbers a little bit closer to the median and the average percentages of the list price. As far as the listing and buyer activity in Seattle and Bellevue, we've seen upticks in new listings. We're about 22% more new listings in Seattle year over year, and in Bellevue, 50% more new listings year over year. And we're starting to see those inventory numbers climbing. If we look at a graph of the past few years, you can see how much more housing is coming on the market. 2023, 2024, 2025. A few years ago, the story was there's just nothing to sell. And we're starting to see more houses on the market. And we're also starting to see more closed sales, but those numbers aren't as dramatically different as the amount of people willing to sell now, if we look at some of the other graphs. So we're seeing an uptick in closed sales, 10.9% in Seattle and 8.1% in Bellevue, but those numbers aren't nearly the same as the amount of new listings coming on the market, which is causing the amount of inventory to rise. Another thing I shared in my King and Snohomish County updates, which are the two main counties that I service, and also pretty much the two counties that make up the general Seattle Bellevue metro areas. You also have Pierce County down south, but that's kind of more its own thing. You're seeing a trend towards more inventory overall. There's been more new listings and in a lot of cases similar or even more pending sales. It just means buyers making purchases. But the numbers have been trending to larger amounts available. So at the end of the month in Seattle, there were 58.5% more homes for sale than last year in the same month. And in Bellevue, 135.9% more. So we're seeing just so many more houses available in the same month. And this is the time of year where inventory starts to rise. More homes are coming on the market, but they're coming on the market way faster than they're coming off, which is just causing the amount of houses to build. In Seattle, we're seeing a 2.2% uptick, which is more than 50% above last year's numbers. And in Bellevue, just like the supply itself is higher, the months of supply, 2.4, is 140% higher than the same time last year. And what does this mean, right? What does this mean for buyers and sellers? Let's talk about a little application. Ultimately, supply and demand is the biggest influencer of how the market's performing and how it will perform in a local market. Who wants to buy what's available and go? Now, it's a lot more complicated than that, but as we're looking at the numbers, a lot of times the amount of inventory that is available matched with the amount of buyers will be a good indicator of where prices are going to be and where they're headed. And so right now, we're seeing more houses coming on than buyers, and we're slowly starting to see, and the King and Snohomish County numbers in general are showing that the amount of multiple offers is starting to dwindle. The percentages over asking price starting to dwindle. And that means that we're going to start to see a more equitable playing field for buyers and sellers in the Seattle housing market, and a little bit earlier than in some other years. Now, this is no big prediction that the housing market's collapsing, because it's not, especially given the high interest rates. Nothing's really changing here, right? We've stayed in this higher interest rate environment. I think we're going to continue in it, but we've been in this same environment for a few years, and rates are actually a little bit lower than they were overall. And so we're staying in this higher interest rate environment. We have more buyer and seller activity, which is a good thing. People have adjusted. And so at this point, we're in this more stable environment. Something that I've noticed, and you maybe have as well if you've been following along, we're not seeing 10, 15% more over the previous year. We're not seeing the appreciation that we were seeing in past years. We're seeing 3%, 4%, 2%. We're seeing a lot more normal appreciation numbers for real estate. And I think that interest rates have a big part to play in that. So the housing market overall has recovered back to where it was as far as prices go. The affordability, though, is still challenged because of where the interest rates are at. If you think, okay, well, we're back to where we were with a higher interest rate, people are paying more money now on a monthly basis than they would have paid, and they're paying the same price for a house that they would have bought in 2022. What happens if interest rates and when interest rates come down? I think that the housing market gets a big shot in the arm. For buyers, I think it's tough. You're in a market where prices are back to or close to all-time highs, and you have a higher interest rate environment. It's not going to get better. It's not going to get better when the interest rates come down. The fact that interest rates are staying up is actually the big reason that prices aren't continuing to climb even more. And so if I'm a buyer, as much as I want a lower interest rate, I'm also wanting to pay less for my house. And the opportunity to get a house for less than the previous highs is pretty much gone, but the opportunity to beat the next window of time is still there. So if you're buying, I think something to consider is that you need to have a longer time horizon than I might be moving in the next year or two and I'm going to get out of here. So if you're a buyer, somebody looking to buy in Seattle, you need to have a 4 to 5 year time horizon where you plan to stay in that house. I think it makes sense to buy in that time horizon. Things will change. If you think, I want to buy something and then move in a year or two and make a profit, you might be out of luck. And so that would be a consideration for me. Maybe you rent, pay less on a monthly basis because rent's actually cheaper than buying right now. And then consider purchasing wherever you go. But if you say, hey, I want this to be my home base, I think there's some opportunities to build equity, but it's not going to happen as quickly as you might like it. And I think for sellers, you're in a great spot to sell. The competition starting to die down, but you still have an opportunity in 2025 to sell and get close to all-time high prices. And so I think as we head into the rest of 2025, we're going to be in a more equitable environment for buyers and sellers. Buyers aren't going to have to pay as much over asking. The pricing is going to be more transparent. And sellers, you are also most likely not going to see as much competition as the year continues on for your house, unless interest rates for some reason magically go down, which I don't think they will. but you're also going to be getting all-time prices for your house. So thanks so much for tuning into this month's Seattle real estate market update. If you got some value and made it all the way to the end of this video, I'm sure you did if you made it all the way to the end of this video, please consider subscribing and giving some love to the video. And if you find yourself considering or trying to figure out what you should do with your real estate goals, please feel free to reach out.